Hey, what's happening? Trader Tim here from EminiMind. It's June 12th, doing a trade recap video. Been a good 2 days, so I wanted to run through the trades from the last couple of days. Today we had a 15-minute opening range breakout go, and that got its plus 20, which was nice. And then after that, well, I guess before that, the first trade that I had was on the 1-minute chart here, and that one was this low hammer here, and we had the exact same setup happened yesterday for a really nice run. So this one was the low of the morning, and notice that here is the gap fill. So the direction, we're going long towards the gap fill, towards the 21, and that's what you want to be doing early in the session when you have an unfilled gap like that. So took that long, got a good, the initial entry bar was a small move, but then the second bar was a really nice big move, and then took it up to the 21 here. So I have been using the 6-point target on the 1-minute trades, and that's worked really well, especially the last couple of weeks where things have been smaller. Like the ranges have been smaller on the day, so we haven't had as big of moves. So first, getting that 6 points has been nice. The next trade that I had was at 651, and that was a hammer off of the 21, I believe. Yep, right here. So we had moved to the 21. Now it wasn't going super steep, like the 21 wasn't moving up in a steep angle, but looking where we came off of lows, we made a higher high and then a higher low, and then another higher high, and then this pullback to the 21 was a higher low. So I figured, well, that's a nice pullback. It was not necessarily at a 50% retracement, but we did have, we were on our way to the gap fill, so that made for a, targeting the gap fill. We also had value area high above us, and so we were working our way up with a nice uptrend in the chart itself with those higher highs and higher lows. So took that one long. That had a nice quick break off of the signal bar, but then we kind of petered out a little bit. The way that I like to trade the markets is, with very little clutter on the chart so that I can really interpret the price action without a whole lot of extra junk all over the chart. And a lot of times when you add too many things to the chart, you end up hesitating and almost becoming paralyzed by having so many things that need to line up before you take a setup. And sometimes it's best to just, be able to simplify so that you can get in without hesitation. I almost flipped this one here when I saw the inverted hammer, but I felt like we were pretty close to filling the gap. And with this uptrend in play, I thought, well, maybe we'll just, come down a little bit to the uptrend and then resume higher. So I didn't flip that one. It did get a really strong sell-off that second bar, the entry candle, and then did come down to the 50% retracement like that. And then we kind of went into this triangle and then took off to the upside. So those were my two inverted hammer trades. And then the 15-minute traded to the upside and got its 20 points, maybe half hour after that when we got up to 41, I think it was, 40 and a half, somewhere around there. So really good day today. And then yesterday, one of the reasons this morning that I jumped on this hammer right away, wasn't going to let that pass me by, is because yesterday morning, if we go back to Wednesday, we had the exact same thing happen where I'll pull up the day prior so we can see the gap. We had a Wednesday, we had gapped up, so this is Tuesday's close. Wednesday, we gapped up, we sold off, and right after we filled the gap, we got that hammer. And so the prior day's close is a very good key point to pay attention to right at the open when you're day trading. So as soon as we filled that gap, we had a hammer. We also had a low tick of the day, and that thing ripped super nice yesterday off of lows, and it ended up being the low of the morning until we got that bigger, quick drop. Where was that? We had this kind of quicker drop and then sold off later in the session. But as far as the morning session is concerned, that was a nice pickup of lows. One thing I did over on my NICE tick chart, I used to have this turned on, but if you go to studies and go to your tick range study, down at the bottom under alerts, I turned back on my audio alert for high and low ticks. So all you would need to do is check enabled and then pick a sound, and that will alert you for high and low ticks. I had it turned on before COVID. I think I turned it off in COVID when we had a big spike in volatility, and it was just high tick after high tick, or low tick after low tick. But it is kind of nice to have on, because if I'm looking over at my 512 tick chart and I hear the ding, I immediately know we have a new high tick or low tick on the day. So then it can cue me up to be very alert for, okay, if we make a low NICE tick, I want to be looking for a long entry. If we make a high NICE tick, I want to be looking for a short entry. And if we have a low tick at the low price of the day, you bet you want to be getting long there. And if you get a high tick at a high price of the day, that's going to be a really good short entry. Now, what you want to watch out for is if you get a low tick at lows, and we bounce and then we roll over and go lower. Then we get another low tick at lows, and then we bounce a little bit and roll over. Well, now what you have forming is a downtrend. If you get a low with a low tick, and then you make a lower low, and then another lower low, now the pricing structure is telling you lower low, lower high, lower low, lower high. So if we get a low tick at lows, like let's say yesterday morning, this was a low tick at lows, and then we went lower in the next couple of minutes, now you do not want to be buying low ticks, because the market is starting to form a downtrend, making lower lows and lower highs. But if we have this one-to-one breath, very flat market where we're moving more sideways, then high and low ticks, can be bought and sold all day. So those are really good setups. Yesterday's hammer and inverted hammer trades, 639. That was the whoops. Go back here. That was the hammer. Actually, no, the first one. Sorry, 39. That was this inverted hammer. So this was a lower high off of the high of the morning, and then again targeting the gap fill below. The entry bar got a nice little push, but then we came up and formed the hammer, making opposing tails, and that took me out right away for I think a 1.5 stop here. Then the next one was that nice long hammer that took off, just green candle after green candle. That's exactly what you want to see, trailing each candle on the way up. And like I said, I've been using that 6-point target, 3-point stop, 6-point target on those. If you have multiple contracts, you can use that as your first target and then continue trailing on the second half. That's why it's always nice to have multiple contracts. When I first started day trading one contract, I actually found that I excelled way better and did a lot better in my trading when I was able to get to 2 ES contracts. So the quicker you can get to 2, the better. If you have to trade micros to do that, maybe trade 4 micros, that would also be fine. Yes, there's a little bit extra commission, but the ability to scale out is really helpful, because psychologically, you're not tied to one entry and one exit with one contract. You can have a fixed target, like let's say here, 6 points, and then a trail on the second contract or the second half. So this one was a nice run up. And then I had one more trade that was, where we, oh, I took this, we started to flag a little bit, and I took this one. We came down to the 21, took that one long, and ended up just having my stop under here taken out for like a point. So we had one hammer, two hammer, and then this third hammer ended up breaking. But after this first hammer that I took in that consolidation, that ended me with a small stop here and then a small stop on this first one. So kind of sandwiching with the bigger winner in the middle. I just called it a session right there. So overall, happy with the last 2 days. It's been slow and sporadic the 2 weeks prior. Next week we have a Fed meeting on Wednesday, holiday on Thursday, expiration Friday. So good week to just you know go on holiday, take a vacation, take a staycation, or um, you know get away from the markets because we also have rollover coming into effect next week as well. So next week's going to be a wacky week. I won't even bother trying to trade it. And then come back after the Fed meeting and you'll be recharged and refreshed and ready to go. So if you have questions, you can drop them in the comments. If you like these videos, I'm supposed to tell you to give it a thumbs up and subscribe. Otherwise, hope you have a great weekend and I'll talk to you all soon.